What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 10th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we've got a lot of exciting things to discuss. We're not only going to be talking about the continued rally in Bitcoin, but I'm also going to be talking about yet another altcoin position that I've added on to, and I will continue to add on to as we get closer towards the $20,000 mark for Bitcoin. And as we continue into this rally, what's happening on the macro picture that is yet again providing bullish support for cryptocurrencies? We've got lots of things to discuss, guys. Let's not push it off any longer right after our quick sponsor. Our sponsor for this episode is Travala.com. Now, for those of you out there who are planning your next trip for either work or leisure, I highly recommend you check out Travala.com to place your next hotel booking. They not only provide a wide range of selections for places to stay along your travels, but also can provide upwards of 15 to 40% in discounts compared to other leading rates on booking websites. And to top it all off, you can use Bitcoin, Litecoin, XRP, and a basket of other cryptocurrencies to place your next booking. So if you want to learn more about Travala.com, check out the link down below in the description to find out more. Alrighty, everyone, so let's go ahead and take a brief look over crypto markets. As we can see, in the last 24 hours, most cryptocurrencies are in the red or in neutral territory. However, again, we have very few select altcoins actually getting past Bitcoin here. Again, a few anomalies, and also with every kind of coin aggregate site, you're going to have some that are obviously trading with no serious volume. It's just wash trading, things like that. So even a smaller amount are still not able to keep up with Bitcoin, even with all the tricks and trades that they have on their limited exchanges, things of that sort. So it is very interesting to see that there's an obvious squeeze of liquidity going into Bitcoin. We are pressing up towards relative highs for the year, and it is exciting to see valuations have recovered a lot of the dip we had. I mean, we had a pretty significant pullback due to the fact that we had a very significant rally in a very short period of time. Pretty much what came up came down, and then we've recovered since then quite nicely. So we're sitting right now at $354 billion with a recent high at $373 billion. Again, a bump of Bitcoin above 13,800 will usually get us there. And I think with some of the momentum as altcoins that we've had, you could possibly see the market cap get back to that range and break out to new highs for the year. Now, we've already broken out to new dominance highs. We already did that back here in early June, but we have continued to trend higher. Bitcoin at 65%. So again, we're getting at a range here that does get me interested in exposing a little bit to alts, but I think this tells the general trend, guys. There is a huge flush going on in altcoins right now. You might, for example, not see it as much when you take a look at the top 100 coins, and there's a reason for that. Some of those are going to be remaining around in the next cycle. Again, some of them are more well developed. They have liquidity, they have exchanges, but I'm talking about the cryptocurrencies that are on the second or third or fourth page, the ones that get into the upper 100s in regards to their ranking and market cap. A lot of those are not going to be around next time, guys. So again, assess if your project has a real use case for blockchain. Think to yourself, even though you might take a loss on something, is it worth continuing to hold? Is it worth the risk? If you see it as a lottery ticket, that's fine, but again, I think that there's a lot of projects that people are emotionally attached to. And I've had that sometimes. There's some projects I really like where I've had to cut off in regards to my investment. But anyways, I want to go ahead and talk about the market. And then along with that, not only focusing on Bitcoin, but also share with you guys some of the altcoins that I'm either in right now, and then also that I'm watching, okay? And I also, again, might do a video when we finally actually hit the altcoin cycle, which altcoins that I'm actually considering to go long on, and also why I'm long on them, both on a fundamental and technical factor, kind of full scope analysis. All right, so yesterday, I was watching for Bitcoin to cross through this line here around 13,000, a big even level, and then to possibly come down. If we retested down here over the next few days, this would be where we'd come through. If we broke through, we would come down and have a full scale 40% correction down to around the low 9,000 to upper $8,000 range. But we got a clear breakthrough yesterday. Prices have continued climbing higher. We're just a few $100s away from coming back to all-time highs. So I'm really excited to see this, guys. We've obviously made support here on resistance in the short term. So everything is looking really bullish. Bitcoin's been doing well. We'll have to see if this momentum can keep up. If we continue to get topped out around here on 13,160, that's where I get a little bit concerned. You can see on the hourly here, we've closed down about $100 of gains. But again, it's nothing too concerning in the short term. I'm worried more if it breaks through this line here, which would be at another $200 from this point on. So I think if so long as we hold above here, test this level support multiple times, we can continue to move higher and possibly break out to new highs for this year. So there's not too much TA we can do here. All I can say, guys, I mean, you know, we could analyze this chart. You can look at it in the short term, guys. Look at the trend. Like, it's so silly to overcomplicate it, guys. You know, sure, there can be some serious flash crashes like this, you could call it that, where we close down a day or two's worth of price action. But that's shocking to say that you know, a few days of correction territory like this is a correction. Some people probably wouldn't identify it as that, but the fact of the matter is, I think anything between 30 to 40% down is a correction. But I mean, that's just amazing that it can only happen in a matter of what? I think we had it marked down for 6 days. That's even including the day where we set the high. I mean, let's get real, guys. This is really exciting, and it doesn't seem like this market wants to pull back anytime soon. We do not want to fight the trend. I mean, that's my simplest point here. It's the reason I don't overcomplicate TA. I've actually done very well this year in crypto markets compared to any market, and that's even with me not averaging down as much as I would have liked down here at the dip down here. So again, very exciting stuff in this market, and I think it speaks to what we'll talk about in a little bit in regards to the macro perspective of some of the things, for example, all the central bank and corporate cryptocurrencies that are coming out that are going to inevitably fail, and then along with that, what we're seeing as well in regards to the macro picture for the underlying, you know, kind of poor fundamentals in the economy that are leading to a potential recession. And we're going to be focusing in a lot on Europe in this video. I love Europe. I love all the European countries and stuff. I've visited a lot of areas in Europe, but in the sense of economic weakness, there's a lot of flashing signs, and we'll talk about it throughout the video. Now, I want to let you all know the 2 positions that I built now, just to revamp what I've mentioned before. I have BAT, BTC. I'm sorry, I have the index selected here. Categories. There we go. We got Binance. So again, I'm looking to stack up anywhere here around these lows. The reason for that is because I look for general patterns here, guys. We're down towards one of the worst corrective periods for BAT. Then again, after quite a steady rally and also a pretty harsh environment for altcoins. So I don't know why my thing's drawn out that way. But again, one of the longest corrections as well, the second longest correction date-wise, and then the biggest correction in the sense of percentage decline. But if you really, again, cut out the noise here, this is the range here where we've seen BAT bottom in the low 2000s. So I've already built my position a little bit higher. So comparative to Bitcoin, I'm down a bit, but I'm definitely looking to average in personally, just letting you guys know. And then outside of that as well, Link, you all know it, the meme itself, Chainlink, is one that I'm looking to not only average into over time, but I also bought down a position, and I actually kind of picked the bottom on this. I was very happy. The reason I did this, again, I use percentage pullbacks. As we can see here, very in par with the previous corrections, somewhere around 40%. And again, even though this is in a very short period of time, over 8 days, and we might get another sell-off day, this is a range where I'm considering, you know, again, being a decent position. If Bitcoin keeps moving up, this has been one that's been proven to be positive in a Bitcoin market, where Bitcoin is dominating. And that's the thing. You want to look for players, guys. Again, it's not so much about an emotional attachment or even sometimes about fundamentals. There has been a lot of great, interesting fundamental partnerships with Chainlink. Chainlink has proven a lot of naysayers wrong. They've gotten a lot of great partnerships with Google and Oracle. And what I imagine is going to happen, you know, in the case of Link, just for those who understand it, it's fixing the Oracle issue, which is basically, it's a data issue with smart contracts, being able to transmit information to blockchains and actually have, you know, in a sense, let's say, for example, I always use it as an example, being able to do a smart contract where we place a bet on a sports game or something. Again, this isn't a very commercial application, but if you and I were to make an agreement over, you know, if this, then that, or if this, then that, and one of us would receive a reward if one of the cases became true, you need to have a trustworthy data source to do that. You need to have a way that you can complete that. Chainlink's trying to fix that, and they just landed partnerships with these 2 major companies. And what I believe would probably happen is you're going to have it where Google is actually going to manage the token in that case in order to facilitate the services, and they're going to sell it very similar to how they do with other cloud services. So just thought I'd talk about that, because some people have mentioned, you know, they've been curious about my opinion on it. I could see it doing well, and it is at a pretty high valuation, but I think at this range, this is where, again, on the short term and sense of price range, I'm looking to definitely trade a little bit, see if I can continue the trend. If the trend really breaks over the next day or two and the correction gets more severe, I'm going to move forward and outside of the position. But again, just built a decent position in those two projects. I'm getting more and more confident in altcoins around this range. And again, I'm not thinking in the next day or two. I'm thinking more in the short term. Alrighty, so I rambled on enough about that. Now, I am also going to do as well, now that I've talked about the altcoins that I am in right now, I know you guys still want me to do that video going over a basket of altcoins. I'm going to try to do 2 videos sometime this week, and one of those videos, I think probably the latter of the 2, will be one where I just go through a crap ton of altcoins, and we'll talk about I'll try to cover some fundamentals as well, but also talk about the technical price, which will tell a lot. I can tell you guys that. All right. So let's go ahead and dive into this macro perspective, guys. So we talked about as well just a little bit earlier about how governments and corporations are going back to this. Well, I guess governments have always kind of had currencies in many cases, but we're also seeing again with the Libra that Facebook's creating that there is a growing trend in companies creating currencies yet again. And in the case of Libra, again, trying to be a cryptocurrency, we've also heard about central banks talking about cryptocurrencies. Well, there is a fight going on, and that is in between Facebook and its other corporate entities that have built Libra and the central governments of the world, predominantly the markets that Facebook probably wants to tackle. Now, I have no doubt that they probably didn't expect to dominate the China market, and the reason why is because China is not going to give up WeChat or WePay, WeChat Pay, and Alipay. They're going to have that dominance over the market no matter what. And they will create an equivalent of Libra if Libra is a success across the world that they have absolute control over, mind you. But you can see here that China and India are not comfortable with a Libra cryptocurrency in their economy. And this is really for 2 reasons. One, if there's any doubt that they're going to have a lack of control over it, if there's any sense that they won't be able to have control over it in pretty much every regard, be able to freeze transactions, things of that sort, yeah, you can bet you if they're not going to have a consensus node or play a role in being able to freeze the chain, they're not going to let it happen. Because it's at a central point. It's a consortium blockchain. It's not open source and permissionless. And in the case of India, I mean, for example, to kind of go through this one step at a time, I was basically the deputy director of the People's Bank of China. This is the central bank of China. Mu Chongchuan. I probably shouldn't try to pronounce it. My Mandarin tone pronunciation is not on point. But I basically, the quote here believes that the Libra won't be sustainable without the support of global central banks. As a cross-border protocol, Libra can be used for lending and even disrupt sovereign monetary policy by eroding the government's power over the money supply. So this is another big thing as well. The central banks are not going to give up easily. This is the reason why you had the Bank of England, you had I think I'm trying to think of his name right now. Basically, you had the Bank of England, you had the European Central Bank come out as of recent saying, we need to have a role in this. You also had Jay Powell saying something similar. And you're also having, at least I know in the United States, the congressional body saying we need to regulate this. I honestly wouldn't trust the congressional body as much as I don't trust Facebook in many regards. I would not trust the congressional body of the United States at all with new technologies, that I can tell you. But I will say, in the sense of, the fact of the matter is that there is a regulatory government that can freeze these things because it is not permissionless, right? It is not censorship resistant. And I know they have ambitions of doing that, but even though they have a lot of lobbying efforts to possibly push through public policy to support it, again, if the incentives are there for the financial sector to block it, as they see it as fit as a competition, or a sense of losing control over monetary policy, that's going to be a hard uphill battle to fight. And then along with that, India as well is another case. Now, we don't have any specifically direct quotes here, but in the case of India, they kind of make the case in the article that India has been very hawkish and kind of prone to block cryptocurrencies. We've seen this as we talked yesterday. They've been beefing up their efforts to teach police officers and high-ranking officials how to detect cryptocurrency activity in the economy, and this is due to simply try to censor it. And along with that, they're certainly not going to allow a centralized system like this. And India is one of the largest markets, as they hint here, with over 300 million users on Facebook in India. Not to mention being one of the economies that still is massively underbanked and is massively underserved in regards to financial services. They're probably not going to be able to tap into this market. So I think what Libra, if anything, is going to end up being is a short-term experiment where, I think people mostly in the West are going to end up using it. And I think is something that I not only realized myself, but I actually really appreciate Box Mining, or Michael from Box Mining pointed out, is that what they're really trying to do is they're trying to replace Visa and MasterCard. They're going to become a domestic payment solution. I really don't see this serving underbanked economies because, again, you need something that's censorship resistant. Like if you're going to, kindly respect the, position of, governments that are overbearing in the sense of users' privacy or their rights, and they're worried that they're going to lose some sense of control in this, how do you think you have a fighting chance in getting a new technology towards that country? How do you think you're going to convince those governments when the incentives are not aligned? So I've rambled on enough about that. Well, you want to talk about, companies that have been bashing cryptocurrencies, or at least some of their leadership, as hint Jamie Dimon. JP Morgan has a cargo ship that recently was found to have had over $1.3 billion worth of cocaine on board. And as you can probably guess, the transactional basis for laundering those drugs was it, well, I'm assuming, was it Bitcoin? Was it Monero? Oh, I bet it was that evil Litecoiner grin, huh? Oh no, wait, it was cash. It was cash, folks. And it was on a cargo ship that is owned by JP Morgan Asset Management, who has already gotten caught with one of their subsidiaries last year in money laundering. Oh, sorry, this was actually back in 2017. And also was quite complacent as well when it came to the Danske Bank money laundering of 200 billion euros. Oh, just small figures like that. I'm sure there's some crypto exchanges that have laundered 200 billion euros. Oh, wait. No, there isn't. Because the market of cryptocurrencies isn't even that big. It's the reason the G20 didn't even talk about it in previous meetings before. And we have stuff like this going on, but you don't see a ban on cash. And this just goes to show, guys. I mean, the article here is just too ironic because they have stories here. For example, the bank had admitted in previous cases that we have, for example, like HSBC had basically gotten caught in a case and had to pay out a $1.9 billion settlement to U.S. authorities, again, for this repeated offense of working alongside drug cartels. Now, again, I wouldn't want to say that the entire company is complacent in this, guys. That would be too oversimplifying. The fact of the matter is, though, is that things like this happen. These illegal markets tend to exist, no matter if you have cash or crypto, right? People, if they want to buy drugs, are usually going to get to it. This is one of my very libertarian kind of thoughts. Again, I do not like drugs like this. I don't take hard drugs, and I don't even drink or smoke. Like, it's not my thing. But the fact of the matter is this has been a repeat offense here by major corporate banks that have been, playing a role in this. There's a huge market for this. And don't think that the financial sector, whether it's the commercial banks that or some kind of offshore world bank, that they're not going to be complacent in it. There is big money to be made. And again, as you go through the article, they talk about repeat offense, in this case. And it's too funny. I mean, it's a textbook example of why the argument for, crypto is being used for drugs. I think the person who wrote the article was talking about, he basically talked to a traditional banker in London, talking about how he's like, just like ban the crap, it's only used for drugs. And there's such a misinformation campaign against cryptocurrencies in that regard. And another thing as well, irony of the traditional system, and I think this is going to come back to bite the EU in the butt, because, man, as we go throughout this video, the European Union in its financial aspect, I think culturally, the EU is awesome. There's a lot of beautiful places in the EU. I've been to Ireland, the UK, which I know is kind of on the water right now, the Netherlands, Switzerland, Greece. Oh my gosh. And I've been to some of the Eastern European parts. I've been to Estonia. I've been to Lithuania. It's absolutely beautiful and really nice people. But I will say here, when it comes to central banks and the financial sector, the European, or the Eurozone, I'll be more specific, those who are operating under the Euro or under the European Central Bank are in some very tough territory. And the fact of the matter is that saying that they're not open to having Bitcoin as a hedge, very similar to how Russia or India or China has really been stacking up their gold positions as a hedge. That is very problematic. I think not only because there's a lot of growth potential in Bitcoin, but because they're not confidently going to be the first to the party. They're going to be buying at a severe premium later in the future, and they're going to have to go back on their statements. The reason being as we can see here, we'll go ahead and try to see some of the reasoning. So this is one of the officers, one of the chief economists, Philip Lane. Bitcoin is not a currency. It rather is an asset, and it is very volatile. Okay, so I appreciate that they at least see it as an asset. That's good. That's a start. Bankers at least seeing it as something of some form of value. But the fact of the matter is that they're saying because it's volatile. Yeah, of course it's volatile. It's volatile in the sense of its upside potential during times of chaos. And if the European Central Bank had any sense of self-awareness, they know what's going on right now. I mean, for example, you can take a look here at central bank balance sheets. So we've got three major ones here. We've got the Fed, which is the central bank of the U.S., the European Central Bank, and the Bank of Japan, the green line. As the U.S. has been cutting, our market has been outperforming pretty much any global market at the time because we had the tax cuts, which has provided stimulus for the market. And we've been able to actually roll off our balance sheet because that means we've had extra additional capital inflows. So we can, deduct these, it's fine. We can basically take on the outflows of central banks' balance sheets in the case of the U.S. But take a look at the ECB just barely tapering off of QE in 2018 and 2019, and now looking like it's going to curve back up. The Bank of Japan continuing to set all-time highs for its balance sheet, picking up more equities, picking up more assets, keep the punch bowl full, right? Well, folks, the U.S. now is finally talking about cutting rates, and I have no doubt you are going to hear by the next FOMC meeting, hence, or in the next few FOMC meetings, about the Fed starting to add back to its balance sheet because it has room to do it. And what is that going to do for these? Oh, it's going to let them fill up the punch bowl even more. It's going to let them add up even more. And that's a real severe problem, guys. The sense of complacency that's going on. We'll talk about, more specific to the European economy. The Fed index as well is flashing its highest level in 2008. This is one of the biggest recession indicators that they use and is now at its highest level since the later part of 2018. 2008. My apologies. Coming out of 2018, it's crazy. It's been out of been more than a decade here in the longest economic expansion in U.S. history. But Raoul Pal, who's the founder of Real Vision, who does some really interesting finance interviews, did a really awesome tweet storm here that just talked about what's been going on in the financial sector. Now again, I can't summarize things too well, or I can't talk about everything. But generally speaking, he basically goes on a tangent about how this is not just something we found with Deutsche Bank. All right, we talked a lot about Deutsche Bank potentially being a bank failure in the Eurozone. And the fact of the matter is most banks are in the same category. Look at all of the technical charts here for UBS, right? United Bank of Switzerland, setting slightly higher lows. This to me looks like it's yet again setting up for another breakdown to retest the lows down here and break even lower. A really big doomsday scenario. Credit Suisse as well. Look at this. Back down to levels we haven't seen since 1990. I mean, you have to factor in inflation, guys. Like the inflation of prices, obviously, over time. Usually people deduct some of their profit they make in stocks because the currency has lost value over time. Credit Suisse is back down here to its levels in 1990. These are banks. They make money through fractional reserve lending. They make tons of money off of trading services, and they're down to levels in 1990. Take a look at this as well. Another case scenario here. One of the major banks in France, SocGen here, almost back down to levels in 1990. If it breaks below these levels, guys, this is screaming to the fact that the Eurozone is in trouble. And not only that, the broader financial sector. Another bank here in Spain, BBVA. Look at this. Back down to levels we haven't seen since 2008. It's been holding here on a thread. And look at here, Barclays as well, one of the other strong banks in the UK. Looks like it's about to break down, back down towards 2008 lows. And this is, again, basically Raoul talks about this kind of scenario. The knock-on effects are lining up to push one bank after another to the cliff of death. And there isn't a thing that the ECB can do about it, as they only have one mandate, which is inflation. Every central bank wants to get inflation going to stimulate the economy. And they're going to have to cut rates again. But the problem is there is only a little bit of range left to cut rates. So it's a very interesting scenario here, guys. I thought it'd be interesting to share with you guys, taking a look at all this data and charts. If you guys want, I can leave this link down below. But even U.S. markets, guys, I've been kind of parading U.S. markets. I know my gun-toting American, patriotism is probably showing. But and the fact of the matter is, in the case of U.S. markets are just as fragile. If the Eurozone falls, if the European financial system goes into ruin, U.S. markets will as well. And I think that's why markets haven't pressed to all-time highs, even though the Fed has hinted that it's going to cut rates. I think they're tired of Powell's, words. They want to see action. And if they don't get an announcement that there's going to be like an estimated 3 or 4 rate cuts by, mid 2020, markets will dip right back down. Our correction period will be in the picture yet again to go down to these levels in equity markets. The Fed is calling for a recession in its indicators. Every sign right now is showing us that there's weakness in the economy. If you're really looking at the fundamental factors, and when enough dominoes, stack up, one of those just tipping over can be severe for the economy. All right, guys, I've rambled on enough. I'd love to know what you all think about this. Thank you all so much for watching. I appreciate you, as always, tuning in. It's always exciting to run through these things in the market with you guys. And if you guys have anything you'd like to add in the comments, feel free to. I want to get a discussion going down below. But until the next video, everyone, thank you all so much for watching. I hope you all are having a fantastic day, and I'll see you all in the next one. Stay tuned.